Momentum stocks melt down and the power stocks of 2025 begin to emerge. My name's Jessica Amir, a market strategist with Moomoo. Thanks for your company for the daily. Well, US and Aussie stocks have pulled back as momentum fades and traders are bracing for US inflation data that could determine if the Federal Reserve cuts or holds rates next week. In the US, we've seen the Nasdaq 100 and the S&P 500 fall for their second day. Now, both key indices are down about 1% from their all-time record highs. It seems investors are locking in profits from this year's best performing stocks, with Nvidia now down 9.4% from their high, and Vistra, the best performer of the year, has fallen 16% from its peak. Now, despite this, Vistra is still the best performer in the US this year. It's up almost 270%, 267% year to date, in fact, followed by Nvidia, which is the second best performer this year, up 172%. But what you need to know is this: it seems investment managers or sophisticated investors are taking profits from some of this year's darlings, and that's why they're losing momentum, continuing to lose momentum, in fact. And investment managers are instead reallocating funds to some of the biggest losers, believing that they could see a significant turnaround in 2025. Now, while the narrative hasn't changed for AI chips in the case of Nvidia, or for uranium in the case of Vistra, which is on the screen here, it seems the market is signalling that it's time for you to perhaps consider adjusting your portfolio for 2025 and look at stocks that could make a comeback and lead the market higher. So that's why we're seeing some of this year's biggest losers and the dogs of 2025 make a big turnaround from their lows. So we've seen Walgreens, as an example, rise 18% overnight. I guess gaining extra firepower on a potential takeover offer. But Estee Lauder shares have been a real standout. Estee Lauder shares have continued to climb up off their lows. They're up a staggering 25%. Now, the beauty and cosmetic giant has got high exposure to the Chinese consumer, and they could stage a comeback here because, of course, China is vowing to boost domestic spending and cut interest rates. So Estee Lauder shares, consider that they are down 43% this year, making them one of this year's biggest losers in the S&P 500, but they could be worth your consideration for 2025. Thinking about the biggest losers of this year as well, Walgreens shares are down 60%, but as we just mentioned, their stock is markedly up. All in all, the takeaway here is that the narrative could shift, and you should be considering some of these stocks because they could become some of next year's winners. Let's change pace to what's happening down under in Australia. The narrative around interest rates was flipped on its head yesterday. The Reserve Bank of Australia opened the door to a potential February interest rate cut. Now, this basically means it could be full steam ahead, i.e. risk on, for interest rate sensitive stocks and sectors such as real estate and technology, but perhaps not just yet. The broad Aussie share market is now continuing to come under pressure. It's down 1.2% from its record high, and it'll probably continue to come under pressure here because investors are readjusting their portfolios for next year. Now, what does it mean for you? Well, consider momentum seems to be fading from some of this year's best performing stocks. Take an example at Zip. Zip, indeed, it is the standout of the year. It's up 361% so far this year, and Zip shares have continued to fall from their record all-time high. Life 360, the second best performer this year on the ASX, Zip and Life 360 meeting a similar fate, just coming under pressure as investors lock in profits and position for 2025. So look, basically all that means is consider that some of these darlings of the year could continue to come under pressure before resuming a move back higher. Let's change pace to gold. Now, gold stocks are back on the rise, and that's because the price of gold rose 1.3% because China is pledging more stimulus. China, of course, the biggest consumer of gold. They're approaching Lunar New Year celebrations, and that's a time when we see a lot of gifts exchange in way of gold jewelry. So keep an eye on one gold ETF in particular. We're showing it on the screen. It's the GraniteShares Gold ETF. It goes by the ticker code of BAR. It's up 5% from those fresh lows that we can see on the right-hand side of the screen. Now, in case you didn't know, this ETF is just like some other ETFs in the market that tracks the price of gold, and they hold physical gold in London in a cellar, or rather a vault there. So consider stocks and ETFs such as BAR will probably move higher because China is likely to buy more gold. And secondly, consider a softer inflation print tonight in the US means the US Federal Reserve could cut interest rates next week. And that obviously would probably put pressure upward on the gold price and bring gold ETFs such as BAR further to new highs. And that's the daily. Thanks for your company. For more information, head to Moomoo for stocks and ETFs that we've covered today.